Greetings from Kotak Mutual Fund. I wish you and your loved ones a happy and healthy 2022. We are very happy to bring NFO of Kotak Manufacturing India Fund. It's opening on February 1st and closing on February 15. In 1980, India and China were of similar size in per capita GDP. Today, they are 5 times bigger than us. China became manufacturer to the world, whereas we kind of fall behind in that race. We did well to become pharmacy to the world. We did well to become a major player in automobiles. But other than those two sectors, our record in manufacturing sector is not impressive. When it comes to services, we have done a great job. Saudi Arabia is the world's largest exporter of oil. It's a matter of pride for India that today our software exports will exceed oil export of Saudi Arabia. We believe, like services sector, stars are getting aligned for manufacturing sector. Let me take you through the story of mobile handsets manufacturing in India. We were second largest consumer of mobile handsets in the world. In FY 2015, we imported close to $8 billion worth of mobile phones. There were a couple of factories manufacturing mobile in India. Our total production value was just about 19,000 crore. It was feared that our electronic imports, including mobile handsets, will exceed oil imports. The government took several steps. They invited global manufacturers through 100% FTI, automatic route and single window clearance. They gave incentives through phased manufacturing program and electronic clusters, import duty production, tax cuts and production linked incentive scheme. All this resulted into rapid growth in mobile handset manufacturing. In FY 21, it is estimated that our production value will be 2,20,000 crore, up about 12 times from FY 15. We have become second largest manufacturer of mobile phones in the world, overtaking US and South Korea. Today, the world's largest single location mobile phone factory is operating in Noida, Uttar Pradesh by Samsung. What we did in mobile handset manufacturing is going to get replicated across many sectors. As I mentioned earlier, stars are getting aligned for revival of India's manufacturing. There are 5 factors which are responsible for that. The first factor is China plus 1. The world has observed that China exported coronavirus, whereas India exported vaccines and medicines. There is geopolitical imperative for Western companies to shift their sourcing base, their manufacturing base out of China. Many countries are in the race to attract those companies. India also is participating there. Many of our peers have better infrastructure than us, but none of them have as large market as we have. We can leverage access to domestic market and also incentivize through PLI scheme and also give protection through import duty to create renaissance in India's manufacturing sector. We will also be supported in this revival by relative weakness of Indian rupee vis-a-vis Chinese currency, which in the pandemic period is down about 16%. The second factor which will support India is PLI scheme. I already mentioned how PLI scheme has transformed mobile manufacturing. Now this success is going to get replicated across various sectors, including automobiles, auto components, bulk trucks and APIs, special steels, technical fibers and so on and so forth. More than 1,50,000 crore worth of investments will be done over next 5 years in PLI sectors. more than 1 crore direct jobs and 3 crore indirect jobs will be created in these sectors. It is estimated that in FY25, more than 1% of India's incremental GDP will come through PLI scheme. The third factor which will support revival of manufacturing is Deleveraging of India Inc. In FY20, Nifty 50 companies' combined profit was about 3,50,000 crore. It is estimated to touch 7 lakh crore in FY23. Bulk of the companies have used this profit to repay their debt. The debt equity ratio of India Inc. is down from about 100% in FY15 to 60% in FY22. These companies are sitting on cash, their leverage is low, and the return they get by investing into debt mutual funds is mid-single digit. Clearly, they will be looking forward to investment opportunities. In steel, cement and sugar sector, we have already seen investment cycle beginning. The fourth sector which will support manufacturing is revival in housing. In FY12, housing was contributing about 13% of India's GDP. For various factors, it came down to about 8% in FY22. Now, stars have aligned for revival in housing sector. In work from home, everyone wants bigger houses. Interest rate on housing loan is at lifetime low of 6.5%. Thanks to RERA, consumer interest and developer interest is aligned. And most importantly, affordability of housing has improved thanks to falling or constant house prices. We believe revival in housing sector will have multiplier effect in various other sectors including construction, cement, financial services like housing finance and insurance, building materials and home improvement and consumer durables. The final factor which is supporting India's revival of manufacturing is climate change and global warming. Today, global warming is hanging sword. Various technologies will be developed to reverse global warming, whether it's electrical mobility, whether it's renewable energy, whether it's ethanol blending or making solar panels. Various industries will emerge in this fight against global warming. Clearly, Indian manufacturing sector will play an important role. You will be surprised to know that India is one of the few countries which have achieved its target under Paris Accord of making 40% of total energy through renewable energy. And we have achieved that in 2021, 9 years ahead of 2030 target. Manufacturing has gone through many ups and downs in the past decades. From the 80s, we did miss the bus of becoming manufacturer to the world. But now, with this 5 factors coming together, from geopolitical imperative to shift supply base out of China, production-linked incentive schemes and other steps taken by the government of India to attract manufacturers in India, deleveraged balance sheets of India Inc. and moderate return exciting them to make investments, housing sector revival and fight against climate changes, all these things will create renaissance in India's manufacturing sector. If we look at Nifty India Manufacturing Index, it has gone through ups and downs just like manufacturing companies. On a 10-year basis, it has created outperformance over Nifty 500 several times. But on a 5-year basis, it has created many underperformance. We believe this last 5 years underperformance of Nifty India Manufacture Index has made manufacturing companies' valuation reasonable, and with this changes occurring on the growth trajectory, this is time to invest in India's leading manufacturing companies Obviously, there are risks attached to this theme. If coronavirus continues to spread and creates lockdown, manufacturing will be hard hit. Hopefully, with Omicron, we believe this pandemic is becoming endemic. If inflation persists high, interest rates can go up, and higher interest rates can impact investment activity and creation of manufacturing capacity. The revival of manufacturing hinges upon government policies, rules, and regulations. We must ensure that encouragement given by the government continues for the manufacturers in the days to come. We believe all these risk factors are manageable, and renaissance in India's manufacturing sector will be reflected into stock market. We are excited to bring NFO of Kotak Manufacture in India Fund, which is opening on Feb 1st and closing on Feb 15th. If you want any additional information, do visit our website www.kotakmf.com or get in touch with your mutual fund distributor or investment advisor. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.